What's going on, guys? Welcome back to the channel. Welcome back to another video. Today I want to talk to you about why I don't deal with GameStop stock, and why I don't think it's a good investment for any type of investor, being beginner, intermediate, or advanced. And this is just my opinion. I'm not trying to change your ways of how you think about it, but this is something I would not deal with at all. This thing is like, you hear the term a falling knife. This thing is on fire, and I wouldn't even I wouldn't walk away from it. I'd run from it. I'm gonna show you why. First thing is, yesterday, which is Friday, they announced that they were gonna have a 4-to-1 stock split. Now they announced that they were gonna have a stock split months ago, and the stock tried to take off again like it has been taking off before. Now with this type of stock, which they call like a meme stock, because for years it hasn't been making any type of money, and then all of a sudden, it was like a battle between short sellers and the company and other investors, and they tried to make the stock take off, like sort of like what they did with AMC theaters as of late, and it got a lot of buzz through the media and stuff like that. But let's really take a look at this and see what's going on and reasons why I wouldn't touch it. And I think, from me not being a financial advisor, I don't think you should neither. Now let's check it out. Bear with me. I'm looking at my computer screen, for the analytics and all this stuff. But just bear with me. Number one, we just get into it. Number one, the thing is with this, we're not going to talk about share stock right now. We're not going to talk about the stock split. I'll get into that later on. But normally, the original trading price for, if you average it out from 2002, since it's been out, minus the jump when they was, buying the shares and made the thing go up, was $5.48. This thing doesn't even have a registered PE right now. Right? Another thing is, the business is not profitable. I'm sitting here looking at it on the fundamentals page. I'm looking at it, and their revenue was down 5.47%. 5.47%. Really? I mean, they're not even turning a profit. And they haven't been turning a profit, looking at this for months. And then you look over here and the price performance, right? Now, 4 months ago, they announced the stock split, right? Now, you look over here and it says, over the last 60 days, the stock price has went up 9.3%. Over the past 30 days, 18.5%. This is going up in the green. Last 5 days, with word of the stock split coming, insider information and all that, another 15.7%, right? So now we're sitting here at 24 plus 9, 33%, plus the little decimals, 35% in the last 60 days. People see that it's going green. They're like, oh my God, we got to jump in on this stock. We got to be a part of this, But the thing is, this right here is a trap. It's not even a value trap because the numbers don't even line up with the fundamentals. Now, overview, looking at it, balance statement, right? Cash, short-term investments, low. Total debt. This thing right here is messed up, man. It's not good at all. Right? Now, like I said, the business is not profitable. It usually was trading at $5.48 a share, right? Since 2020. We'll go from 2020. 2020, it kind of jumped, with all of this hype stuff with it. Now they announced the 4-to-1 stock split. Has no dividend, right? And the thing with me with this is, now they did the stock split, right? Okay, now you got the stock split 4-to-1 stock. So for every share you get, you get 4 more, it turns into 4 shares, right? Now, looking over here, they got 304.5 million shares, right? Now, if you times that by 4 and add more shares, right? you got 1.218 billion shares, 1.2 billion shares, right? Roughly. Now, what do you think happens to the value of the stock when the shares are ×4 and it's not making no profit or anything? You're just adding shares and it's not even a demand for this. It seems like a setup to me. You know, like just if I'm not correct, the last quarter when they announced it, you know, 3 months ago when they announced that they were going to do the split, or they were hinting at talking to the board to do the split, right? Somebody right before the end of the closing day, $1.7 million in GameStop share. Boom, they set it off. It sounds like an inside job. And companies like this, now I'm not taking away from GameStop because I mean it has value to a lot of people. You know, you have kids that play games and stuff like that. But they trying to stay afloat, man. They are trying to stay afloat. And you have to be conscious of stuff like this. Like a lot of companies, smaller companies, especially with the way companies are going up and down nowadays, they're just trying to stay afloat. I know that was some type of inside move. You can't, who would do that? Who would do that out of the blue? You know, and then it's like the stock is trading at $40, right? When they do this stock split, a lot of people that are not seasoned investors or beginner investors will say, oh, okay, you know, they'll start pouring money in it. Like yesterday, it went up 4.3% in a day because the stock split. A lot of people that are doing that, you know, that are buying into this stock now are very, very, you know, they're retail investors that don't really have a lot of knowledge, or, you know, they think it's a good company because of the name GameStop. You have to be smart. I don't see any seasoned investor or any big time investor besides people in GameStop or affiliated with GameStop that are talking about how good this stock split is. You know, and I'm telling you, don't be surprised before this stock split, right? A whole bunch of accounts, whale accounts, will come in and buy a whole bunch of stock. They're going to feed the hype with this to try to get it up. But I mean, if you go from 1 million shares to 4 million shares, the price for each share, it is diluted by 4. You see what I'm saying? So it's like you're losing money, even though it's the same stock price, you're losing value per share because you're giving out more shares. Now the shares they got outstanding, they ain't even sell all the shares they have. So that's an inside play. You know, and like, I'm not saying this to hate on the stock or anything like this, but this is a perfect example of what I'll be talking about when people invest in something that they don't understand. Now you understand GameStop sells games, video game consoles, and all sorts of stuff, but you gotta remember they got competition. Microsoft, I think Apple has the VR now where you can put the thing on and do all that, or that might be Microsoft. I don't know. I'm not a game person. You don't even have to go in the store no more. They relied on a lot of retail sales, you know, and I know they're trying to make range from being online and stuff, but when you have an Xbox or not an Xbox, PlayStation and all that, you can order through the game network, through Microsoft. They don't even sell the cartridges or the CDs no more. This kind of company is going the way of the condor, man. It's going to go. And I just, you know, like I said, I don't have no ill feelings about the company. Everybody, you know, and they're trying to save the company. But I think they're just trying to stay afloat. And I just think this right here, they're trying to pump it again like they were before. And a lot of people are going to get hurt in this. You know, and that's just my assessment on it. You know, just be careful, man. You know, I mean, I just care. I'm only saying this because I care. And I don't want to see nobody get hurt because I know how it is to invest in something and act like I knew what I was talking about, or, you know, get sidetracked and not pay attention. You know, you set it, forget it, and then you look back like, damn, what happened? And then as you get more seasoned with investing and understanding the lingo and how stocks move from your experience of being in the market, you'll look back and be like, you know what I mean? This is a hold your head stock. This is one of them stocks where you get the stock and you're like, oh, it's not moving. What happened? Why is it doing this? Or like it'll go up and you're like, somebody will buy into it like, oh man, I better jump in with the fear of missing out. And then you jump into it and all of a sudden It's like how GoPro was. GoPro took off. And a lot of people jumped in GoPro. Oh, GoPro's the future and this and that. But technology changes like this all the time, all the time, all the time. And now, boom, a lot of people took a hell of a loss. And this has the makings of the same thing. You know, but I mean, that's just my little chime in it. Going back to it, the business is not profitable, haven't been profitable for a while. Before this meme stock and all this sticking to the man crap, you know, retail investors been doing with short sellers, the short seller war. The stock was averaging from its inception up until 2020, $5.48. Has no dividend, no profit. 4-to-1 stock split, I think, is a setup. And man, I can't do it. But listen. I just wanted to speak a little bit about it, you know, and just chime in on it about the stock there. I was sitting there laying around. I was thinking about it. I figured I'd make it a video. But yeah, that's just my perception, guys. Man, if you could like and subscribe, share the channel, get the word out. I like to talk with people that like mine. And do me a favor, big favor. Hit that like button, that thumbs up button, and hit the bell icon so you can get more videos from me. And leave me a comment, man. Do you got GameStop? How do you feel about it? Do you think it's going to go and do it, you know, is it going to be profitable then? You know, and I'd like to hear from you. But I mean, yeah, this is just my opinion. I mean, you're an investor. Everybody has their own road, but this is one I don't want to take. You know, I'm Steve, and you guys have a good day. Happy investing, and I'll see you in the next video. Take care.